Nooch, calling him Nooch, but he had made the comment about having these breakup structure levels, like, you know, the relevant ones, the ranges that we're stuck within. While they're important, they're not everything. And you know, I told him, I said, I 100% agree, and that, you know, we should never base our trades solely on those, but they do tell us. And I was just telling CT, Conscious Trader, this before we started on the Zoom call, that what they really tell us ultimately, and for me, it makes up 50% of my plan. You know, not overall my strategy, but my plan for whatever trade I'm looking at. What they ultimately tell us is, where is the you know, what is the trend doing? What should it do? What is the high that should hold, or high that should be lost? You know, what do we need to gain or lose to continue or change trend, right? And we can start on higher time frames and continue down through the relevant ones that, you know, like for instance, the weekly, the daily, the 4 hour, the 1 hour, 15, you know, and then we can use like what I've been showing. I don't know if you've seen, because you weren't like on the Wednesday ones before now.
I saw the, I mean, is it the trades you're talking about, the trades you took?
Well, not that, like I refer to it, but how I use, let me just show you real fast, how I use the fib tool, and I'm going to go ahead and
I saw that. I saw that. I was in there for a bit when you said the numbers that are kind of like your confluences,
right? Those are like what I refer to as my magnifying glasses, right? Like I use those to help me find the spots to look for, to base my trades off of, you know.
Great.
And it was like this one right here, like this level. I had this level right here that I was really confident was going to reject really close to it, right? And unfortunately, I was out for that day, and I mean, oops, you know, this little mouse will get away from me. I love it, but man, if you mess up, that thing will freaking fly from you. And it comes like right up, almost right to it. You know what I mean? And I would have dialed it down, of course, to the 1 minute. And, you know, if we, for instance, like if we kind of zoom in here, I got my thing.
You can see it. It looks like there's a chalk around there, which I can see around happening around that region. I think I can see it. Well, a flip and a chalk, actually, not just a chalk, actually.
Yep, there is micro flip right there. You see it right there where it comes up, boom, and then boom, rejects, and then you lose that. So you got a flip, and then their chalk is right here. So I'll zoom in for if somebody else didn't see that. So and this is fractal. So the high and the low, let's just say fractally speaking, this would be the high, and then the fractal low would be here. Okay. And now when it comes down and comes up here, but it doesn't break this high, because it should have, right? Like it should have broken this high, and it doesn't. And then it comes down here and doesn't lose the low. This is the flip, right? Like that's the flip right there. And then when this low there, I'm going to change this to white, and then I'm going to put another one. I'm going to put another one on the flip there, and we'll make the flip yellow. All right, so the flip is yellow, and then the chalk is white. So when this happened, this is the best case scenario you can ever hope for. You know what I mean? Like this is the highest probability, but this is also the point that I was making the other day when I posted my trade, where I was like, you got a limited amount of time to get into a trade if you want to ride it out to the bottom. If you wait too long, you know, if you wait till, all right, I'm going to get in, you know, at this level in here, great. Yeah, that's awesome. You know, you can short that. but you need to keep in mind that you can't expect to get out of this short what you can get out of this short. You know what I mean? Because
the farther you go, the more risk, the kind of more risk you're taking, actually.
And the more you need to lessen your expectations. And that's like, man, that's the biggest thing I try to like drive across, because it's one of the largest things that I've struggled with, is like learning how to adjust my expectations, because that's where greed, and this ties into the mental thing, man. Like it really does. People neglect it, but greed is a powerful thing, and so is fear. And they tie into TA, they tie into the way we plan our trades. And sometimes we don't even know it, man. We don't even realize it, you know, and it takes a lot of self-awareness to really kind of see it. So, you know, I was telling somebody the other day that got in a short, you know, similar to this. And I was like, well, that's okay. That's good. But you just need to understand that this thing is going to pull back on a higher time frame. And if we go like up to a 1 hour, like we can see like how obvious it was, right? Like if I took a short here, that's all well and good, man. Like you could have shorted all the way down to here, but you can't expect to get out of this short what you could get out of this short. And the same goes for this, and the same goes for that, right? So we have to really keep our expectations in check. And it's freaking not easy, man, but understanding the fractal nature of charts is by far, in a way, the most important thing in my mind.